Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for November the 4th to the 8th, 2019. And so we arrive at the final 2 trading months of the year. And the headline this week should really read, VIX melts while indices hit all-time highs. And so there's just the right amount right now of uncertainty and doubt that the markets are able to basically climb that wall of worry to all-time highs. You never want to get into a market where everyone's kind of leaning in one direction, as those quickly get overheated and tend to correct quickly. Where in this situation where we're trading in now, even though we're at all-time highs, people are still very, very doubtful of the rally. We've hit all-time highs throughout this year of 2019, and there's been doubters the whole way. And so the market has continued to climb up that wall of worry and basically ignore all that headline risk. So all dips this year have been viable opportunities, as I've been talking about throughout the year. And this week was no different. We had a small pullback. There was a bit of news with tariff talks, and that went, and some earnings, and that was some weak earnings in places, and that was again just a buying opportunity for the bulls. So for the coming week, we have a slower macro news calendar this week. There is not a lot on the calendar to watch out for, other than on Thursday we have that jobless claims number, which people will be watching. Other than that, oil number on Wednesday. But the thing in focus this week will be, of course, earnings. So we did get past a really busy earnings week this past week, where we had the majority of the FANG names reporting, and that was the potential market mover. And most of the FANG names reported, and they were adequate for the street. And this coming week, Monday, we got some notable names are Uber and Groupon. People are gonna so GRPN. We want to watch those. On Tuesday, Amran, and then on Wednesday, kind of a higher beta stocks reporting like Square and Roku. So that'll be on the momentum watch list. Thursday, people will be watching Disney, and then Friday, a bit of a slower reporting day. So we'll see where the momentum takes us into the close of the week. So let's launch into the charts now and talk about the week that was and where we might be going from here. So, as I've been saying, the quest to all-time highs was just a matter of when. Not if, but just when. And so this week, the SPYs hit those all-time highs, and if we begin with our friend the VIX, that's basically the mirror opposite. So, VIX basically melted, and the indices went to those all-time highs. So let's dissect things a bit now and get into the actual price action, which is going to tell us what we already know, and that is, number one, look at that. We've been talking about this for a while now. How many quarters? 1, 2, this is the third quarter now. It was outside, inside, and down, and down, and down. So this is like 3 consecutive red quarters. So still another red quarter. VIX has to do a lot to get out of that downtrend. So for the month of November, we start off in the red. We had a bit of a gap on Friday, so this is a gap that could get filled. Gaps don't always get filled, but something you would definitely want to watch out for, as we're now going right into lows. This is basically the lows we've seen for this. Look how low that is, right? So this is the lowest it's been in a long time. Again, the VIX is not a great proxy, because again, it does decay and it will go to zero. But if we take a look at something like the VIX futures contract, let's pull that up for a quick second, just to contrast that. So we're hanging out in this range here. Okay, so we're looking at the 1457 area. So not those all-time lows that we had in the very, very low volatile environment of 2017 into 2018, but still, that's why you still have that's why you still have big moves in stocks, because if the volatility was as low as it was back in 2017, then the markets are very, very muted. But there's still enough uncertainty and doubt there where people are actually buying puts and trying to protect themselves, and so the VIX is still hanging around that 14.5 range. Okay, so not those all-time lows like you see on the VXX ETN, right? That's basically all-time lows on that contract. Just a matter of time now before Barclays, who owns this VXX contract, will once again do a reverse split and make this thing pop back up again, right? So they will do that reverse split. This will not go to zero. Okay, so that's a red month so far for VIX, red week for VIX. What else can you say about that? And here's basically all you kind of need to know about the week. Let's do this here, right there. So this is what you want to be watching out for now. So here, starting last week on the 23rd, these are 2-day bars. It went outside bar and down. Okay, so that's a momentum condition. Outside bar down, down, down now. So now you need to see a previous high get taken out in order for this momentum condition to get extinguished. We talk about that every single week. This is just something you want to watch now. Is when is this momentum to the downside get extinguished? When will that happen? When you get a higher high. Okay, you'll see the difference what I mean when we talk about this momentum condition. If you haven't followed me before, I'll give you an example of another one on TLT that happened this week. Okay, so on the daily, we ended the week up with a big gap down, and that was from this situation here. Outside bar, inside bar, and down. I was watching that very, very carefully. I called that out to my room. How does it break on Friday? Which way does it break? Is it break up, a break down? Because there's a bit of a scare here on Monday, a bit of a bump on Thursday. But anyone who got long VIX or alternative who shorted the indices, the SPY for instance, on Thursday, they were underwater as soon as we opened up, and then they squeezed them all day. So that's called in this case here, it's a bearish kicking pattern because you open below the previous low, below the previous close. So this is that gap here that traps anyone who got long in the sequence, and then they squeeze them all day. And that's the wonder of the bearish or bullish kicking pattern. So as I said already, the 2-day chart is what you want to be looking for, and you just want to basically be seeing, okay, how far can this thing sell off? Just keep watching these highs. So long as you can be making lower lows and you don't get a high taken out, this thing can keep going down. That's how you follow price. Okay, you respond to price as opposed to trying to pick a bottom and saying, well, I think support's down here somewhere. Really? Where's the support? There is no support, right? This thing will go to zero. There is no support here on the VXX. So all you do is now follow price and see when the momentum gets extinguished. Okay, so this is the situation now. October was the month for the bears if they were going to get a chance to turn this year around. If you recall, people were, there's still people out there who are doubtful of this bull market, and it is a bull market. We're hitting all-time highs basically every week now. Q's hit it last week, SPY hit it this week, and people have, in some ways, short-term memories, in other ways they have long-term memories. Now, last year, 2018, we had that really big sell-off in Q4, and so there's still a bit of fear that we might get the same thing happening again in 2019. So let me just quickly dispel them. I'm just going to spend just a bit of time just quickly dispelling the differences between why I don't think it's going to happen this year versus what happened last year, because fundamentally the market structure is different this year than it was last year. Last year we were kind of in a precarious position that allowed the selling to occur, and once the selling really accelerated, then we had a number of pivots that were within the proximity that triggered a bunch of stops and forced people to liquidate. So what I mean by that, let's talk about it this way. So historically, October is the worst month for equities. Okay, so the month of October. We are now out of October. We're in November now, so the bears had their chance. They had their chance in October. They took their shot here. So here's October right there, right? Beginning of October right there. They had their chance. That was the move right there, right? Unfortunately, the buyers fought back. So this is a pop-up in VIX. So it goes outside, up here. As soon as this low gets taken out, it's over, right? So there, this is the 3rd of October. It gets taken out in this 2-bar day right here, this 2-day bar, excuse me, and then goes inside bar, and boom, you know the rest. This is the 9th of October. That's the bar, and you know the rest of the story now. The month of October ends at the lows. Okay, so let's contrast this. Let's pull back a bit now. Let's go back to the daily chart. So on the monthly chart, if you recall, this is October last year for the VIX, okay? So here, right there, this is the month of September, and this is what happened to the VIX last year. It basically popped up strong and basically gained 40+% in the month of October. That's what caused the momentum selling on the indices. vice, and because of the breakdown in indices and the buying in the VIX. So the reason why this is significant is because, well, let's do it this way. Let's first look at now that we know that the month of October last year had the heavy selling, right? We had that sell-off in October last year. Let's look at a lower time frame chart now. So we were looking at the 2-day chart before. It was right here. Okay, so here it is. Right there. So look at how we ended last September. This is September 2018, not this year, right? So here, the 21st, 25th, 27th. Outside, inside. Then it gaps down. So not unsimilar to what we just had here this past week. We had an outside inside on the daily chart. This is an outside inside on the 2-day chart. But this was in September. This was not in October. This was going into October. Why is that significant? Well, this is what happened. Look, so it goes outside, inside, and that ends the month of September. Here is the fresh month and the fresh quarter. So you get a fresh month, fresh quarter, and it gaps down, and they close it green. As soon as it pops back above here, it's an inside bar reversal. This is a new week, new month, new quarter. Inside bar reversal right there, okay? Full time frame alignment, meaning as soon as it breaks above this area here, everything is green, okay? The week's green, obviously the day's green, the month's green, the quarter's green. And then they go after everybody's pivots. Anyone who got short in this sequence here, boom. They take them all out right to there, pulls back, and takes them even further to take out these pivots up here. Not quite high enough yet to take out these pivots, but on the VXX that is, but enough definitely to take out all these guys. So that was what I mean by the market structure was such with time frame alignment that allowed that to happen. So if we look at that now on the same chart on the weekly, it's right here. Okay, so market structure wise, why did that happen? It's because of this. Okay, so it pops down and they pull it back into the range again. As soon as it comes back in the range, you put these pivots in play. The reason why last year was more susceptible than this year was because the high of that week was so close. It wasn't that much work for this to take out the previous week's high, right? That's when you start seeing bigger reversals, when you have reversals across higher time frames. It's obvious, but let's put it this way, right? What is more significant? A reversal that happens on a 4-hour chart, or a reversal that happens on a weekly chart, right? A weekly chart. So when you see the week's high get taken out, that's obviously way more significant than a 4-hour chart reversal. But what happens is that it begins at the micro and goes to the macro. So really big reversals begin at the lowest time frames and then make their way out to the highest time frame because price is fractal in nature. So this lower time frame chart, the 2-day chart, we're over here again. Okay, so this 2-day chart we showed earlier, that eventually triggers the weekly high. Okay, that takes out the weekly high right there. Okay, and then that triggers the monthly to happen. So let's go back to the month. Where were we? 2018. Here, I'm going to change back to my other chart over here so it's a little more clear when I get rid of some of those lines. Here, 2018, because the high is within reach. So we saw the reversal on the daily, on the 2-day. We saw the reversal on the weekly. The reason why it becomes a major reversal is because they also take out the high of the previous month on full time frame alignment, right? So there, it wasn't that hard for it to then take out the weekly high, then take out the monthly high. And then it creates an outside inside, which ends up going up. The outside inside up, then inside bar reversal back down, and it's been nothing but selling since. So this month, why is it harder for this to happen in 2019? Number one, you don't have the full time frame alignment anymore because now it's the month of November, right? So guess what? Here in November, we're trading here. Yes, a gap down, so we're going right in the lows. If things get exhausted, things could pop back up again. But in order for this major reversal to happen, first off, you have to deal with the weekly signal, right? So how do you get a weekly reversal? Well, this coming week, you have to first break above this bar's high. So this past week's high, in order for there to be a major reversal, this thing has to come back over and pop up plus 5% in order to take out that previous bar's high. Okay, not impossible. That's what you want to be watching for. Then on the monthly chart, you then also need to take out the previous month's high. Okay, that's up here now. Okay, so this, let's say it does happen. All right, this is how you need to be forward thinking. Let's say you believe a reversal is going to happen. This is what it would need to look like. This bar here, with only 2 months left, for the market to be catastrophic, it would have to do something like this in October. Okay, it would have to go here and come all the way through, creating the outside bar. Right, so that's what it would look like. So if it's going to happen, I'm not saying it's impossible, but if it does happen, this is what you want to be looking for: is that this bar opens down here, which it probably will on Monday, and throughout the month of November, the buyers pull all the way through back to the range, creating an outside bar. That's what you're gonna see in terms of that being a really, really big reversal, because it will take out the previous bar's high. Okay. The issue here is that you have the quarterly open right there, right? And so now, unlike back in 2018, where right at the beginning of the quarter you had that time frame alignment because you opened up down, it popped up. Here you're opening up down, you already have the quarterly going against you. That means anyone who's looking at this chart on a 3-month chart, they're not buying it. You know what I'm saying? They're not buying it because it's red. It's red. It's just that simple. You know, it's gonna pop up here, but it's still gonna be nothing but a red chart until you get above that quarterly open, till this thing starts to turn green, right? So here, going back to 2018, right? This is an outside bar. Okay, so this thing here has to come back all the way through the range to take out that pivot high. So, you know, Q3's highs, Q3's highs before we get that bigger reversal, right? This was Q3, sorry, we're here. Yeah, this was Q3's highs in 2018. Okay, so once you have that understanding of the different time frames and what that looks like with the market structure, then you can put the pieces together and say, what's the likelihood of this happening? Not saying it's impossible that we see a major reversal, and certainly we probably will have a pullback between now and the end of the year, but for the market to really sell off, there'd be a lot of work that needs to be done by the bears in order to turn around this really, really big banner year for the indices. Because, case in point, let's just go back, we'll finish up the VIX chart here now. We'll go to the SPY chart now, and we'll move on. But the SPY is up now, I'm going to delete this line, it's up 22.5% for the year. Okay, so it would take a lot for this thing to turn red. It would just take a lot. So if anything, we may not close on the highs, but it'll still be a good year for most investors. Okay, let's leave it there. So if you are more interested in hearing about what major market reversals look like, go on my website, tradingedge.org, or search my YouTube channel. Just type into YouTube, the Trading Edge. .org, and you'll find my channel, and search for the major market reversals, where I do an examination of, I think it was like the 5 or 6 major market sell-offs, and I examined it from a price action basis, bar for bar, so you get an understanding of, you know, what the price action looked like. That kind of exercise is really, really helpful to condition you to see what major sell-offs look like. Okay, so let's get back to the analysis. So for the week, for the SPY, let's go a little faster now because we did a bit of analysis there. SPY, now we have a green quarter, so we broke above the previous quarter's highs. We broke that inside bar condition we had last week. Now all-time highs. Okay, month closed basically at the highs. This is what we need to watch out for here now. Outside bar and up. See what I said last? You know, the bears had a chance in October. That was their chance right here. So they went outside bar, but at one point it was down here, right? They actually had taken out that low, and so they had their chance, but the buyers bought it right back. It was a buyable pullback, and then they bought it right back, so we didn't have that thing that fell over in October like we had the previous year. Now we're November, getting close to American Thanksgiving, then, you know, the Christmas rally, so this is, yeah, it's less and less likely we're going to see a big reversal. Okay, so there's your outside and up now for SPY. Now it's a momentum condition, right? So you're now simply watching when does the low get taken out to turn off that upside momentum. But now we are getting to the highs of this Browning formation, right? So the markets now have hit that top Bollinger Band. So it either has to keep going up and do the Bollinger Band walk, or we might see a bit of a pullback into the coming week because it's hard for markets to keep going that way unless they keep going. Like look back here in 2018. Here was the last time we had that Bollinger Band walk. Where Jan, right there, we had 3 weeks where it's surfing the Bollinger Band. Actually 4, 1, 2, 3, 4. Then once that low got taken out, boom, back down again, right? Going into this is Jan. Look at that. That's January and that's February of 2018. So can the markets do the same thing going into the end of the year? November, December, right? You surf that Bollinger Band, and then maybe January you fall back in again. February fall back in. We'll see, because that's going to be more significant because it'll be the end of the quarter, right? In January, and it'll be a brand new quarter, brand new month, obviously, and brand new decade. So then that will be a new time frame that will be that we'll need to respect and see how we trade around those opens. Now, the daily, let's quickly talk about that. So kind of the mirror opposite of the VIX here. So now it's a momentum condition, outside up up. Here's an outside bar on the 2-day chart. What's the next bar? Outside bar up, outside bar, outside bar and down. Watch for that. And this is kind of the picture. All you really need to know there is here, right? Outside outside. So this kind of scared some people out earlier in the week. So Tuesday, Wednesday, outside outside, and it went down. So it looked very, very negative. And again, by now, if you're thinking that it's really negative, then you haven't been conditioned well enough by the market yet, because every dip is buyable. So these are just buying opportunities by the bulls and flushing out any weak longs or late longs as they go into highs. And so they sell off a bit down here, get people out of the positions, they buy it right back again, they defend the weekly open, they bounce off this 8-period moving average, and they go outside down. Momentum gets taken out right there when it gaps up, trapping all anyone who got short down here, and they squeeze them all day, closing close to the highs. Very similar for the Qs, although the Qs, we got those all-time highs last week. So Qs now, outside bar up on the Qs, right? So outside bar condition and up, momentum there. On the 3-month, again, green quarter right now, looking strong there. On the weekly chart, look, we haven't had 1, 2, 3, 4, 5 consecutive green weeks in a row for the Qs, but now hitting the top of that Bollinger Band. Do we get that Bollinger Band surfing thing? We'll have to wait and see, right, what happens here. If it breaks below the low here, and that's the previous all-time high, that yellow line, we come back in and test that, it's something to watch out for, okay? Not saying it's going to break down, but there's a chance that we break above, and you always get that pullback, and you retest that breakout area. Okay. Again, as the pullback, what I'm saying here is this could be another buyable opportunity. Don't get scared out and flip and go ultra leverage short, because again the market hasn't rewarded anyone who's done that this year. Okay, the easy money has been to the upside. Okay, and on the Qs 2-day chart is what you want to be watching for here. The last 2 days of the trading week went inside, the last two-day bars for the trading week went inside bar up. So now, if you break below the low here, that's an inside bar reversal. So just watch out for that. If that happens, you expect it to come in a bit. So you want to be watching that level. Russell's still lagging far behind the other indices. It looks like a lot of consolidation right now. So if we look on the 3-month chart, this is actually still an inside quarter, and this and that and pretty much all of this bar are still, and this bar, inside of this bar. So you see that there? So basically we're trading inside year. Okay, so that's what it looks like. See that? Outside, inside on the yearly chart. It will probably remain inside year. I'm putting it out there with only 2 months left. I don't think the Russell is in any position yet to take out either sides of those ranges. So we'll probably end the year inside year, which will be the first time ever, right? Look at this chart that I have for IWM. Since it started trading back in 2000, we've never had an inside year, and it's very possible happens this year. Again, there's still 2 months left, so I don't want to make this sound like it's gonna happen for sure. But the chances are, just based upon how it's been trading this year, we probably don't get outside of that range. Okay, but I've been known to be wrong before, so we'll see what happens with that. So outside, inside, and again, just to put it to clarify, this would be an excellent opportunity next year. Outside, inside, that means we've had a lot of volatility, followed by a tight compression of volatility, and then we expect something to happen for 2020. Then we're gonna if it takes out one side of the range, that will get very interesting, as we'll see a lot more volatility come back into the Russell. But for now, very tight stuff in here, right? That's really tight trading right now for a Russell, in terms of, if you relate it back to the prior year. Okay, but it is doing well. It's still trading in a tight range. You can see that tight little broadening formation is working in. We've had, again, 4 consecutive green weeks in a row for the Russell. So another green week for the Russell. And on the 2-day chart, just like the SPY here, outside bar up, and then another outside bar. So what happens next? Outside and up, outside inside, outside bar and down. Watch for that. Okay, now Dow, and unfortunately my Dow chart still isn't looking right because of the bad data that TradingView gave me here for the date of the 18th. So I'm not going to focus on the bigger picture, because that kind of gets skewed here in the data. But know this, that we're still trading inside month. Okay. We still trading inside month? Actually, yes, we are still trading inside month. Actually, I'm just going to double check with my trading charts. 1 second. Okay, so I double checked my trading charts, and no, we are not trading inside month anymore. So it did break above the previous month's high, so there's a green month. On the week, another green week for the Dow. And basically, we end the trading week doing like we did here, like we had with the SPYs, where it went outside bar and down and back up. Same thing with the Dow. Outside bar, down, back up again, squeezing anyone who got short in this sequence. Bullish gapping pattern. Okay, 2-day chart looks like that. Outside bar the last 2 days, and now we want to see, just like with the other indices, what's the next bar? Outside up, outside inside, outside bar and down. That's all. Right now the bias is up, but we just want to wait for the next bar. Okay, because outside bars are not, they are not portenders of good or bad. We really want to see the next bar to see the greater context, because anytime you get a big red bar, big green bar, people all of a sudden get either very bearish or very bullish. But it's really not enough to simply focus on one single bar. It's not sufficient enough, because we know, after looking at the price action enough, is that the next bar can change the whole pattern, just like we saw here on the daily chart, right? If you got really scared out by this, if you really got really bullish with this green bar here because it was outside bar, the next bar looked terrible, because all of a sudden, you took out the previous outside bar's range and it went down. But then all you gotta do is buy back above here again, and then it goes back to, it goes back and takes out that pivot. So the outside bar, we want one more bar to get more information. Okay. TSX had a decent close to the week. So TSX now on the bigger time frame chart. So still for the quarter, still inside quarter on the TSX, but month, still inside month as well. Week, there was a green week though, so we had that inside bar reversal on the TSX. Suggesting watching this last week. We had that inside bar and down. Looked a bit bearish, but they did pull back into the range. And as soon as you take out that pivot high, you're going after these highs, and that's what happened. Still trading below the the quarterly open right there. So now it's a green month, based upon Friday's trading. But again, we want to see how we react to those levels this coming week. Okay, so to end the trading week for the TSX, we had, let's look at this condition here. It's pure momentum right now. So we had a big day for TSX, big relative to what's been trading recently, but it's this kind of happened here starting the Tuesday. It went outside bar, up, inside, and up. So momentum condition to the upside. You need to watch and see if there is a lower low, okay, before the momentum gets extinguished. Because this here, see that line? That's the weekly high, the previous week's high, right? It breaks it right there on Wednesday. Goes outside bar up with the momentum move, right? If you buy a breakout, it kind of fails here, because if you buy this, it pops back against you here, and then it sets up an inside bar, and then on Friday, gaps up, and it keeps going. Now, let's talk about EM, emerging markets, doing very, very strong. They had a couple of weak months there, especially the last quarter, but since then, we're still inside quarter this quarter, but we've had a good strong 2 months here. So here, buyers bought it back at the bottom, creating that big wick, and then for the month of September and October, they really bought back EM. So right now, green month. We ended the month green in October. 4 consecutive green bars, green weeks for EM, and to end the week, just like we saw with SPY, outside bar down, gaps up, trapping all the shorts with a bullish kicking pattern. To watch the 2-day chart now, if you're looking for that momentum move to happen, you're going to be inside bar. This is an inside bar reversal, right? So what goes inside bar and pops back up again, taking out that previous bar's high. So anyone who got short here was quickly wrong, and they took out that pivot high and that pivot high, and now it's going right back up again. Now we got the outside bar. So what happens next, right? Does it go outside and inside, right? And then sets up another potential move to the another potential consolidation and break move, or does it just keep going, or down, right? So keep those three scenarios in mind as you watch the price. You never want to be wedded so tightly to any particular outcome. So you always want to be, as you're looking at your different scenarios that are possible, looking for at least 3 scenarios. I've talked about in different videos before, but looking for at least 3 scenarios, right? So anytime you have a bar, like you have a bar that closes, what's the next bar going to be, right? So there's always going to be at least 3. It's going to go outside, inside, outside up, outside bar back down. Those are the minimum 3. The other, I guess the additional context you can put in is, if it goes outside bar up, what happens if it comes back in the range again? If it goes outside bar down, it may come back in the range again. It's not a break of that range. It's basically back inside the previous bar's range. So basically, you have 5 scenarios there at the very least when you're talking about just pure price action. Okay. So now on to TLT, because TLT defended. I talked about TLT here at the beginning of the video, and I wanted to share that momentum condition that was happening there. But it really looked like, just to take a big picture for a second, it looked like the bears were actually going to be to turn around the momentum in TLT. TLT has had a really good year here in 2019. Starting here, this is about the end of last year. 1, 2, 3, 4 consecutive green quarters. Right now, inside quarter for the final quarter of the year. Okay, monthly chart, outside and up. Okay, and momentum will get extinguished if this low gets taken out. October, it came real close. It looked like, here it's only 136.54. It got down to 136.99. So only 55 cents away there from taking out that previous low. And now we open up squarely inside the previous month's range. So a lot of work to try to get outside of this previous month's range. So really big range there for TLT. How to get outside that, you want to be watching that. On the on the broader context, you see this broad information happening here, right? So you're getting this higher than that, and this is lower than that. So it's going back and forth, basically looking for pockets of liquidity. On the weekly chart, this is what we've been watching. Oops, excuse me. It was outside bar down, momentum to the downside, right? So as I mentioned last week, you had 2 conflicting trends going on. And again, the sign of a great mind is the ability to hold on to those different opposing perspectives. On the monthly chart, it was outside bar up, right? So that's momentum to the upside. But on the weekly, it's outside bar down. So which one wins, right? Well, they both are significant. And so this week, we saw that the momentum finally got extinguished on the weekly chart. So once you broke above here, it took out a higher high. And so that means the monthly chart's momentum is still in force. And the weekly chart finally got extinguished to the downside. It popped up, got stuck at that quarterly open. That's why it's significant, right? The quarterly open and the monthly open significant. It hit that level, came back in again, but it did extinguish this immediate momentum move to the downside. So bears here, or sellers, had to cover if they wanted to keep their profits. The guys who did not cover, now they're hoping it doesn't go any higher, right? So if it does pop up, goes outside bar up, then that puts these guys' pivots in play, because if you're short from up here now, you're like, man, I hope it doesn't come up and get me. But you become a really good target if you start to put your stops there. People know there's going to be liquidity to go after up in there. Okay, so on the 2-day chart, let's just wrap it up on TLT on that one there. It is here inside bar and up. If it breaks back below there's your potential inside bar reversal to the downside. But we did get that weekly break, right? So if I look at my daily chart here, okay, so this blue line right there, that's the previous week's high. Okay, so if you just take a look here, right, so that's the previous week's high right there. So now on the daily chart, this becomes a potential buying opportunity here, because here is your breakout, is a gap up. So it gapped up, broke the previous week's high, and who bought that gap, right? This is the issue with the challenge of buying breakouts, is that if they don't work, then you're going to be underwater really fast. So if you buy this breakout is going to come back against you most of the time, and did, and then the buyers picked it back up again. It's always better to buy these pullbacks. So it did close above the prior week's high. So now if the buyers this coming week, if they take out this high here, Friday's high, then they can basically, this will be a buyable pullback, because if you take out this bar's high, it will immediately go after that bar, and that will take out this past week's high. So that will create the outside bar up condition we talked about on the weekly chart, right? It's outside bar right now. That's the bar's high right there. That bar's high was created on Thursday right there. See the 141.68 level. So if they break above here, this will break things back above the quarterly open, and then they'll go after that pivot, which will then trigger that weekly outside bar then up condition, creating even more momentum. So that's what you want to watch for. If this Friday high gets taken out and the buyers are definitely going to be in control, we might see a momentum push to the upside for TLT. GLD. So GLD finally showing a bit of strength. Had a couple slow weeks there where it looked like, again, its trend was a little bit in jeopardy, just because we had a break of the previous monthly's low. But for the time being, the quarter now, still inside quarter, and the momentum condition is still active in GLD. Outside bar up, inside quarter so far. Okay, monthly chart, inside month, getting close to taking out that prior month's high. And the week, here it is. Same sort of condition here, but one inside bar and up, right? So one inside bar up, and this week here we got the outside bar. So we had a slight lower low there, 139.60. The low here is 139.55. So just enough of push down to set off some stops before the buyers pull back up again to break above the prior bar's high. Okay, and so that looks like here. Let's talk about it on the 2-day chart. Yeah, I got it right here. So right there, outside bar and down. Once it broke back above there, right? So we know that pattern now. Outside bar down, breaks above there. That's a bullish gapping, kicking pattern. They're gonna go after that pivot right there, right? So what's the high here? What do you think? Like I said already, 142.83. The high is 142.90. Just enough to take out that pivot high. Again, setting off stops in both directions. Okay. So right now, momentum on GLD, outside bar up and up. So you need to see, does this momentum continue? You're right at the Bollinger Band now, right? So if it breaks back below that, the momentum will be extinguished. It'll fall back in the range again, like we've been doing lately, right? So it hits one side of the Bollinger Band here, right? Pops back up because it can't stay below there. Hits it again there, can't keep going, pops back up in the range. Hits it up there, pops back down. So we're kind of playing ping pong right now at this kind of tight trading. So we want to see if it continues to do that or not, or you get some smooth trending. SLV. We talked about SLV last week, and it's still green for the month. Ends the month as a inside month, not enough to obviously break up the previous month's range. Starts the month of November inside month. Okay, inside quarter still, so firmly within the previous quarter's range. Right, how to get out of that? With only 2 months left, it'll be kind of hard, but we'll have to wait and see how that plays out. And this week, because it's so tight, it ends the week as an inside week. Okay, so now you want to see, how do you break above this inside week's high? Because if you break above that, you can go after that pivot, and then ultimately that pivot there. That's an outside bar. Okay, so right here, so what you want to watch for, just like we saw with the, is that right? Yeah, there we go. Just like we saw with the TLT product. Now this data is not great. I'm just going to double check something. The weekly high here was 17. It says on TradingView. And then the daily, yeah, 17 right there. So that's it. Okay, so we have here on SLV is inside bar to close the week. All right, so if we break out here above on Monday, you break back above here, very good chance we take out for Thursday's highs. That will trigger the inside week to the upside. Okay, so that will be a push to the upside. Thing is, it has to keep going because you're right in that Bollinger Band. So there's not a lot of room for error there. It has to keep going, otherwise it'll pull back in and stop out any late longs or guys who are playing breakouts. Okay, 2 more names, and then we'll just do a quick run through of some stocks that are interesting for the coming week and month. So we talked about gold and silver. Let's talk about digital gold. Of course, BTC, USD. Let's bring up our Bitcoin chart. Bitcoin basically been consolidating the gains we got for the past week. So right now, big picture, still it went inside bar and down for the quarter of start the quarter Q4, went inside bar down, but they bought it back right away, right? So they bought back that BTC, and it's back inside the previous month's range. So if you think about it, there's only basically one of three things that could happen this month. Number one, well, one of five things. We talked about it already. But number one is we took out the low already of the previous month's range, right? We can't really stay as an inside bar because we already took out one side of the range. The next thing that can happen is that you can take out the other side of the range, right? So that would be creating an outside bar. So that's what I mean by three conditions, because you already took out one side. Now the next thing you do is take out both sides. So that's, if the buyers really get active, sorry, this is for the quarter, then they were able to take out the prior quarter's high, then that would give us an outside bar to end 2019. But right now, looking like it may stay inside this as the volatility in Bitcoin has kind of dried up. So you might end up with an inside bar and down condition. But again, still 2 months left. We don't have to speculate that far out. One thing to definitely note, though, it's on a 12-month chart. It's inside year, right? So even though it's been a fairly volatile year, nowhere as volatile as it was in 2017 or 18, because 18 we had that big sell-off that took it down 70+%. We're inside year. Right, so it's up 143%, but it's still inside year, believe it or not, and it probably will remain this way. 2 months left. Can we really take out last year's highs of 17,252? Maybe not, right? Or we break below the prior year's low of 3215. It's gonna be tough with only 2 months left. All right, so that's the bigger picture. It sets up something very compelling though for 2020. Look what happened back here, right? So here's Bitcoin's inaugural year, well, on Bitfinex, not elsewhere, but here in 2013 we had a green bar inside. Look at that, green bar inside. In this case, we had a break to the upside back in 2016. Let's see what happens next year, right? We get a break to the upside or break to the downside. For now, what we do know, okay, inside month to start the month of November, and here waiting for this week to close. We have the rest of Saturday today and tomorrow before the week closes. And it's probably going to close outside-inside, setting up something quite interesting possibly for the coming week. Outside-inside, we want to watch how that breaks. So on the daily chart, we already have that outside-inside break to the upside. Unfortunately, or fortunately, depending which direction you're leaning, this weekly open is resistance, right? So it's going to be very hard for this thing to close above there with only 2 days left. So what happens with this outside-inside break to the upside pattern with 2 days left? Does it keep going up and get stuck here, or does it break back down, go inside by reversal, take it back to the downside? Okay. Now on the 2-day chart for Bitcoin, you have this potential inside bar reversal long to the upside. Inside bar down, inside bar, there's a break above there, and then create a buying condition. Wait to be seen, right? Because if you look at it this way, right, it's a simple pullback. Right? We had a strong breakout, right? It's a big impulse move. That's a 15% move. And that's a 10% move, net. We're looking at what's actually closer to 16 plus 10, so close to 27% move here across 4 days. And now we've had a decent pullback, right? 2 days, 4 days, 6 days. Pullback, inside bar, it's called consolidation, right? A, B, potentially a C happening here going into next week. Definitely look for that, because another one setting up the same thing is Ethereum. Very similar pattern. Let's talk about the 3-month chart here. 3-month chart, inside quarter. We came really close to taking out the prior quarter's lows, and it still could happen. So that's something you definitely want to be watching for there. Now Ethereum on the weekly chart looks like that. Inside. Okay, right. So the inside. That red line there is the prior quarter's low. And the month right now, again, I'm just gonna change charts here because that is a little too small to see. If I go my monthly chart there. Right, so we're inside. That last month ended as an inside month. If we break below last month's lows, we're taking out last quarter's lows. Very high chance of it happening. Otherwise, if they buy it, they're coming back up through the range. So on the daily chart for Ethereum, just like Bitcoin, you got this outside-inside that's playing out today. Sorry, this is a weekly chart. Okay. Let's see on the Ethereum. Yeah, so on the 2-day chart, inside bar down, and then if it pops above here, you're gonna have things trading with full time frame alignment to the upside. Right now, you're squeezed in between these two opens. See this purple line? That's your weekly open, and down here, that kind of black line, that's your monthly and quarterly open. The quarter's moved up a bit. The month's moved up a bit here now, but you're definitely trading with mixed time frame alignment, which is why it's so choppy. So you see that already with the daily chart, right? If you look at the 2-day chart, you can see on the daily chart, you're wedged in between these two areas. See, so if I really zoom down, this is an 8-hour chart. If I see the there we go, the line pops up. There's your weekly open, and there is your monthly. So that's what I mean by mixed time frame alignment. When you have this kind of stuff, it is basically like playing pinball, right? Just bing, 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 bing back. And then if you're trying to trade, long or short for any significant range, you're gonna get chopped up in there. Okay, so that wraps it up for Ethereum. Let's do a few fast charts now and go through some potential interesting charts for the coming week. So a couple of healthcare names. Look at Gilead, outside, inside. For the week, earnings are already done with Gilead, so we want to see now what's the reaction to that, right? How does it break this outside inside? Similar with BAX, Baxter, outside inside at the bottom of this Bollinger Band. So does it do the Bollinger Band walk, or they pop back up here again and potentially come back up through the range? Twitter been getting really beat up since earnings. So here is the earnings week. Wow, what a crush, right? Minus 22%. Outside bar down, but way below that Bollinger Band. Not saying it can't keep going, but it has to keep going. It doesn't have a choice. If it breaks back above there, we know this is a momentum down condition. That will create a pop. How much it pops? That's we have to wait and see. But that will definitely set up a pop to the upside if it clears above the prior week's high. Okay, Macy's. Okay, here we go. Possible inside bar reversal to the upside. Okay, so if they break above this previous week's highs, then we have an inside bar reversal possibly setting up here on Macy's. NBEV, man, getting very, very tight. Something about to happen on NBEV here because it's going outside, inside now. Actually, this says outside here on TradingView. On my trading charts, I actually have that as an inside bar. Nonetheless, it's very, very tight stuff here. So waiting to see how this thing breaks out of this tight consolidation pattern. YY, momentum move here at the end of the week. Inside bar reversal, so went inside bar to the downside. They bought it right away off of that quarterly open, monthly open right there. The buyers bought it right back in, stopping anyone who got short there. So does it keep going now? That's what you want to watch and see, because that's an inside bar reversal on the weekly chart. Netflix also looking decent. Okay, so Netflix after the earnings looked terrible, right? So there's the Netflix chart. Now Netflix here, my trading chart looks slightly different. But let's take a look at the daily chart here. Yeah, so in any case, the weekly chart, that was your earnings week here. So we had a red earnings. Well, it gapped up, but also came back in again. They defended the quarterly open right there. They broke above it this week. So this here, they broke above, and now possibly going after that pivot that got created back prior to earnings. So on the daily chart, it sets it up with an inside bar reversal right there. Inside bar reversal to start the week. If it breaks above there, we possibly have a chance to come back up here and take out that pivot high. Okay. Monthly charts now. A few candidates. Okay, IQQQ, interesting candidate here. Outside bar down, and then right there's your inside month so far to start the month off. Although we do have earnings this coming week, so something to watch out for. But this here, if the earnings pop, we're going to go after that pivot first. UBA, same kind of pattern. Outside bar down, and then can I take out that? If they take out this week's, they break it back above last month's highs. We go back to take out that pivot high there. That's what you want to be watching for. Okay, and one final name on the monthly side, Diplo, pharmaceutical name. Okay, outside bar and down. If we can break above last month's highs, right now we're inside month. Okay, we do have earnings soon. Let's double check when the earnings are. Earnings right here on the 12th, so watch out for that. But right now you might have a chance to ride this thing into earnings if it breaks above there to go after that pivot high at 684. If you start seeing healthcare rally. We already had a few names like Bax and Gilead. If they all start moving, this is another name that you want to be putting on your watch list. Dip low. Now, just a quick rundown of some of the worst stocks that are on my list right now that I'm tracking. So let's go to the daily chart. Right now, the worst on my list, based upon the Sharpe ratio or modified Sharpe ratio, is Beyond Meat. You can see the chart there. Man, it's been in an awful downtrend, awful depending if you like their products or not. It has been a real downtrend, and I was short this for a while. Unfortunately, I covered it way too early, but right now it looks like it's probably going to break below their IPO price. The 80 seems to be a level that it has went after back at the beginning of the week, last week, and now there's a break back below there again. It's still on a downtrend. No reversal signal yet on Beyond. Another really weak name, a bunch of solar names actually got really weak. So SunPower, nice downtrend there, right? Ride that one down. Another name, First Solar, another weak name. Okay, so far from those all-time highs. CSIQ, another solar name, right up there as being a terrible looking chart. Really weak in terms of their Sharpe ratio. I'll do one more name. Actually, let's just do a couple more. SLCA, lower cap name, but a very weak chart, going down, right into the yearly lows, multi-year lows looks like. Okay, on SLCA, and I'll do two more names. Let's do eBay. Okay, eBay, very weak, and one more, Pins. We know what happened with Pins this past week with that miss in earnings. They did buy it at the end of the week, but certainly one of the weaker charts right now. Pins. Okay, this may be very oversold now because it did break way below the Bollinger Band here on the daily chart. It may pop back up, but so this this had been a weak chart for a while now. This may be the actual end to that sort of negativity, as everyone who got long this thing probably got wiped out if they put their stops below the opening IPO price. Now, to contrast that with some of the better performers, here are some of the top performers based upon, again, the Sharpe ratio or modified Sharpe ratio on my watch list. TSM, so Taiwan Semiconductor, look at that daily chart, going into those all-time highs on TSM. Just nice trending chart. PBF, high flyer, PBF Energy. Celgene, another a healthcare name, going into those highs. Look at that chart. Broke above that broad information back in at the end of September here, or early October. It broke above that broad information and just been flying ever since. Valero doing very well, into those yearly highs for Valero, POW, and Apple in the top 5 here, our top 6 of performing stocks. Look at that chart, into all-time highs for Apple. The broad information here shows us a possibility of going all the way up to let's see here. I'm gonna pull back the chart here and go to the weekly chart. Up here, so maybe the 260 area, even higher, the 260 something area. That's a possible area. It's now outside bar for the week, right? So now, like we said before, what's the next bar? We're doing the Bollinger Band walk here. Okay, and let's do one more name. Amgen, another good performer. This week we had a bit of volatility here, right? We had this bar here where it took out the prior bar's low, but not enough for things for the bars to step back up again and just go right back into those highs. All right, so that is a wrap for this week. I hope you enjoyed the video and you got a lot out of it. As always, if you have any questions or comments, please feel free to post it either on the blog, tradingedge.org, or in the comment section on YouTube. If you enjoyed the video, please give us a big thumbs up. And if you want to get this video delivered to you as soon as it's published, you can either subscribe on YouTube by clicking on that subscribe button, or just enroll in our newsletter and you'll get an email when we actually publish the video. As always, have a great trading week and happy trading.